Amazon, Google, and Microsoft all reporting slowing growth for their cloud segments this quarter, leaving many to wonder how much room is left to run in this already saturated market. Big secular opportunity, though, as well. So how do you position your portfolio? Joining us now, Ali Ghodsi, CEO of Databricks, a $38 billion software company that stores and analyzes consumer data across different cloud vendors, along with Matt McElwain of Madrona Capital, one of the earliest investors in Amazon and Snowflake. Gentlemen, welcome. Thanks for spending your Friday with us, as I'm telling everyone. Matt, let's start with you. What we learned over the last week, essentially, is that the hyperscalers are in pretty good shape. It's slowing, yes, but perhaps more recession resistant than some had feared. What about the rest of cloud and enterprise spending? Where's vulnerable?
Well, I think the cloud players, and particularly AWS, are on a great run here. You know, AWS grew $20 billion in the last 12 months. That's almost the entire size of Google's cloud business. So they're in very strong position. I think there's also a layer that Ali and others are in, like Snowflake in our portfolio, that are players that are at this layer of data abstraction. I think of them as the data-aware companies. And that is a whole group that there's tremendous opportunity, not just for making data to be easier accessible, but turning it into intelligent applications by leveraging the power of machine learning.
Hi, Ali. One question for you. As the economy slows down, how do you see your business in the sense of you get more people coming and trying to take advantage of all the data so they can squeeze out as much revenue as possible? Or do you see things slowing down because obviously we've seen a lot of the big pandemic beneficiaries, the growth slowing over the course of the last year, so they don't need as much capacity from you?
Yeah, when I talk to CIOs, they say that they have cost pressures internally. They're being asked to do more with less. Their budgets are shrinking. So the use cases have shifted. So they're using us to reduce their costs. So they use machine learning, they use AI. A lot of the projects are around optimizations. And then the approach that we have is that we can actually unify a lot of the tech platforms that they already have so that they can just use what we call the data lakehouse, which is just one data platform, instead of having to buy 3-4 different pieces of data infrastructure, data warehouse, data lake, and so on. And that reduces their cost further. And then, of course, multi-cloud. They want to know, can I optimize my spend across the different clouds? Which cloud is cheapest? And there, again, AI and machine learning and data helps you.
And Ali, I just want to follow on that. We've been talking this year a lot about, I believe you have a consumption-based business model. Is that right?
Yep,
so does
absolutely.
Snowflake. And there's maybe been some cracks that are showing what happens to this model in a downturn. How are you thinking of it? And then I want to get Matt's opinion after.
No, I think it's actually great. It keeps us honest, right? So our revenue is aligned with the customer value, which makes us really always focus on what's best for them. And yeah, that's reflected in our revenue. So there's no way to hide. And I think that just creates better companies, because then we'll have to keep focusing on how do we bring value to them. So I think I think we're actually going to see this model more and more in other companies in the future.
Matt, what's your take as maybe a more neutral party?
Well, I agree with this, and actually under the covers, that's what the cloud players are doing as well. AWS had 65% growth in their long-term contracts this past quarter, and they have a total now of average of 4-year contracts with these big enterprise customers. So you have all this booked business that now needs to be consumed. Now, I think the challenge for, and Azure's in a very similar place, with which they call their enterprise license agreements of different forms under Azure. So the key now is, how do you consume those? You're never going to consume those with just the services of the first-party cloud companies. So you need great services like a Databricks. You need services like the cloud collaboration platforms like a SmartSpeak, and many others to consume the services that live on top of the infrastructure. And that's the key to all these enterprises embracing opportunities.
Yeah, we'll see how it shakes out. Guys, thank you so much for being with us. Ali Ghodsi and Matt McElwain.